So I just wanted to review the S&P. A lot of people like to watch the S&P, and it's sometimes it's kind of difficult to this program we designed initially to be very simple, and it kind of looks complex on the outside, but once you get like an understanding of how it works, we believe that it should be a little bit simpler to understand. It should be simple to run, and that's really we intended it. So I'm going to rewind the week here on the S&P. We'll just start on Monday. What was that? Let's see if I can find it. What was Monday? 10th, right? There we go.
Good question.
I don't pay attention to the date at all anymore.
13th was Monday.
All right, cool. There we go. So let me see if well, we'll start on the 14th. We can do the 12th, but well, we just do it anyway. Nothing really happened though, so we'll just start on the 14th. And I've got this study kind of already set up on the on. So we're going to go on and see a lot of the overnight candles have disappeared. So if we go to our study settings, and look at our dominator settings, what I've got put in is I'm not going to look at anything overnight. We're just focusing on kind of what's going on during the day. The indices tend to move a little bit later sometimes, so I want to keep that open just in case we do find something. But typically, we're just going to go for a little bit in the mornings, do a couple of trades, and then move on to the next day, as if we had just left for the day and we're coming back again the next day. So these are the on settings so far. Risk factor, we can turn this way down because we're dealing with the S&P. So you see how small of a channel it kind of travels in. You can adjust your risk in ticks. Plus, you got to remember that S&P is higher. It's $12.50 a tick. So you have to adjust accordingly for that. So if you're used to trading on like a $5 a tick chart, you may want to, do the math before you start doing that. So just something to realize. Everybody knows that. So we're just gonna let's just put it on 15 or 20. Let's keep it on 20. Doesn't really matter. For the momentum, we're going to keep it at 11. I like 10, 11, around that area. 9, 10, 11. Strength period, we're going to raise this a little bit to 13. And then we're going to keep our stop at 8. Set our trigger at 9. Now let's push that out a little bit. Let it get going here. We'll go to 1, then we'll keep our profit target way out so we can mess around with it. And then go through the trades as we would. The reason I want to kind of keep it open too, let's open this up even more on the risk, because I want to show some other time frames while we're going through this and how you can use, you can adapt this to use it on another time frame. So even if, maybe you like trading the 30-minute chart or the 60-minute chart or the 15-minute chart. If you like trading a different chart like that, and you don't like taking a lot of entries during the day, because if you see the S&P on a tick chart, on a smaller tick chart, it's going to show a lot of entries. So maybe you like taking less entries during the day. So we want to be able to show you how to use it on another market to maybe capture the trade you're looking for on a bigger chart. So we're gonna open that up so we can see that. Here we go. We're going to save all, so we have our settings saved. We'll just rewind and play from the beginning, and we'll play it out. We know this is going to be a good trade, but we didn't know that, so we can play it from the start, and then we'll just start kind of analyzing and go through it. And then replay. Play. And pause it in here in a second.
Alert.
Whoops. Okay, well, we can pause it. So I had a pretty fast replay speed, so we'll slow it down here in a second. I wanted to kind of go over the market, but we can do that anyway while we're here.
Yeah, we want to show everybody the replay function too in AT charts or Sierra charts. So it can be helpful certainly to go back and replay activity and see how this program behaves. So if any of you aren't familiar with the replay function, so you can type in any questions and let us know.
Yeah, if you do have any questions about what we're doing, please stop us and let us know, and we can explain it while we're here. So I'm just gonna do my little assessment I usually do. I'm gonna pull it back and look at the bigger scale of things, and draw a trend line here. I'm gonna draw that trend line. Looks like this one got broke, the first one. Now we're at a different pivot point, so we're looking at this as the current trend line. We're taking this long up, and right now we've got our stop at 8 ticks. If we look at how the S&P is traveling on this tick chart, we're about 50% of the width of the channel. So you can even possibly tighten that up a little bit, but it looks like we're getting it's in a good spot for the S&P, the way it's traveling. So that looks to me as a pretty good stop area. So we can kind of let this play through. I can do some stuff. So what I like to do is, one of the reasons we designed this was so that when you could get into a trade and concentrate on the important stuff, maybe picking out your exits more than worrying about managing the trade as much. So that's one of the reasons we wanted to design this program. We thought it would really help out, and we like to do lots of projections once we get into trades. So we look at a lot of stuff. So I'll pull this back, and you know what? That's a really good looking leg right here. So I like to take leg measurements and then move them around and pick out other support and resistance levels that have to do with the length of the movement of the prior movement. Right, so let's pick out some areas in here. That's pretty good there. So here's one right here. We're just going to watch what price does at these points. Now I don't want to exit on these points really. For me, I like to just see what it's doing and pay attention. And now if you see a ton of weakness coming in here, yeah, that's one of the ways I'd see some weakness, and you pull your stop and take what you can get out of it. But this looks like a really good move out. We've broken out of a pretty big range. So now we're just going to let this thing run out. And then just pull our stop up as we watch these levels. And then possibly look for a full target after this starts forming up a leg here. So I'm kind of let this play for a little bit. So it goes up, +1 there, just to protect the trade now. And we can kind of sit in this. Chart's getting kind of messy here. So there's my profit target way up here. Now, here's one of the things. At this point, you can pull your stop up when you're managing this. However, the algorithmic stop will exit the trade. And I'm just going to put up a line. If we're following it, it's going to be somewhere under this 10 EMA. So, you can pull the stop up, but if you pulled it up to here, it's not going to do much good. The program is going to exit prior to this. So unless you're trying to pick out where the high is going to be and maybe putting your profit target right under it, let me pause it real quick. It's going kind of fast. I should slow it down. But we've made this pretty big trade here so far. So you're already so protected by the algorithm itself. At this point, the program is going to exit. You really don't even have to worry at this point unless you're just picking out an area and you're like, you know what, I want to take exactly 10 points when this goes or close to it. So at that time you could run your stop up and try and take it. Or you could pick out one of your levels. If you pick out support and resistance levels and decide that, you know what, I'll give it to this, but it does shoot back. I want to take profits here at 1641, so I'll just go one tick under that and just let it ride out. Now I want to avoid hitting the profit target right now. Just for demonstration purposes, we'll let the algorithm exit on its own. And this is just one S&P contract. We're not doing any kind of multiples right now. We're just, for simplicity purposes, we're showing one. So now we should have an exit. If it tries to push down anymore, unless it goes another leg, it should exit once it closes underneath the blue line. It's going to keep going here for a little bit. Now we can just draw this trend line and wait for the break for an exit. So it kind of broke the first one there, and that was a retest of the break. So we're kind of just watching it for another test, possible re-entry to that former. So we can draw that and just let it play out. All right, so here we go. We should have an exit pretty soon. Next couple of candles if it keeps coming down. There we go. So there's our one trade, first trade, pretty good trade. You still got 10 points on that one by manipulating by letting the algorithm go and trying to pull the target out of the way. Now this is the kind of the way that I may trade. Maybe different from the way some of the other people trade, but I like these big long moves, and I don't like to get out because it's just pulling back a little bit. So as long as it's traveling on the other side of this 10 EMA, you know, usually you're pretty good as long as the trend keeps trucking. So that's what I'm doing, is just letting it kind of run. So that was the first trade. We've made it to 11 o'clock. Probably after a big move like that, there's going to be at least an hour or two of consolidation. So I'm going to pause this and let's just skip forward a little bit here. So yeah, I mean, after that big trade, it's going to get into some consolidation. May go long later. You may trade it again, but now we're approaching the close here, so we're just going to go to the next day.
What Zach is doing is using the jump function in that replay toolbar there to just jump forward 3 hours at a time, 3
Right.
hours and 10 minutes.
So so you can go ahead and just go like 6 hours and get a bigger jump. All right, we're at 2:30. So let's go like 4 more. All right. All right, so now we can start playing. Play day 2. Let's look at what happened. So S&P, what's this 15th, Brig? Is that Wednesday? We're on Wednesday now?
Mm-hmm.
You know, after, you know, it seems like these markets just won't quit going up. Everybody, a lot of people I know are waiting for the correction. But it's funny. So, you know, it's still trying to go. Now we've got a new range. So I'm going to draw this range up here. Now we're watching the range. So this next day, we made this good trade. Good way to start off the week. Even Monday was kind of choppy, and I only think there were a couple of trades. I don't know why my data's not complete through there. But that's a good example of what we're talking about when you're missing data. You got to make sure that you've got it. So to fix it, I could fix it. Delete symbol, I think it's under edit, right, Brig? Delete and download, delete data and download. However, but it'll take a year of data, so it'll take a while. So we're just going to keep on moving here. All right, so we're looking at this range. Now let's bring in some of the other time frames and look at what we're doing here. So if we're dealing with 15th, we haven't seen the 15th yet. So I'm gonna click this for all charts in Chartbook. I'm just gonna hit play and pause, and I'm gonna sync up all my other S&P charts I've got here. So hang on a second. There we go. So I don't know if that thing just cleared me out. Yeah, it cleared me out. So I'm just gonna put what we had on Monday here. All right. Well, that didn't work. It just went through the entire day. Here we go. So let's play it. All right. So not much happening yet. So I'm going to go to 15-minute. Same thing on the 15-minute. We're still looking at a range period here of overnight after that big move. And you see this big entry candle here. What's cool about that is that was actually the same entry candle we took yesterday on our tick chart. So you can, if you're watching multiple charts, you know, I have 3 screens, so I've charts on my left, charts on my right, and then what you guys see in the middle. So if I see my 5-minute chart, and then we can show this perfectly here in a second, and my 15, but if I see all three of them look the same and they all have an entry candle, that's just even more confirmation that this thing should be running, because it's confirmed across multiple time frames, which I like to use, and I think it's a great confirmation. So we'll go back to my tick, 2500 tick. So if everybody asks, what can we can reduce some of this chatter in here. Man, it's taking forever. Let's get it going. We can reduce some of the chatter in here, but you can't reduce everything. No matter what you're doing, it's very difficult to get that done. So, what's the way to do? Is this even planned? I think I'm. Hold on a second. Chart didn't even plan. All right, here we go. Right. Okay. So if we're looking at this, we're on Wednesday. Obviously, we're looking at a possible long again, which is good if we like to follow the trend. And we're looking at everything else. All the other charts are still pointing up. So this can be a very good thing. So I'm going to pick out some targets here. If I were to say, hey, if it went that far, it could possibly go this far again. And then I get another little level here. Doing something like this. So somewhere in here. Just look to see if it does get that far. If not, we're looking at some kind of retrace back this way. A test of the trend line possibly. Or just a correction off of this prior move. So you could pull a Fibonacci and look at some of the areas where it could come down, and we'll just put in a 50% line, and that's good enough for now. So now we're just watching this. So we got a few levels here where we can watch for a move. We want it to break out of this range, really, or be breaking out of the range when you're taking that trade. So we really wouldn't want to take a short in here when we've gone long so hard for so many weeks now, right? So we're still looking for long here. Pick up where I left off.
Alert.
There we go. Right. So we're back to this range we were talking about, and I've already got my settings set from the day before. These are the settings I like for the S&P. I'm just going to use them on the tick chart. But we're looking at this entry here, and I'm just going to pull over my 5-minute chart at the same time. So we can see where we are. Right. Here's the entry we're looking at. And here's something that we use. I like confirmation on multiple charts. If we're in a range, especially, it's almost worth it to just wait till the range in a minute chart, or like a tick chart. I like to wait till the range on a tick chart and a minute chart match up, and we're getting the same entry candles on both charts. So you can see it. You'll see a green entry candle on a 5-minute chart, and then a tick chart too. So that's one of the confirmations I really enjoy. And this is a great example of why. If I'm looking at this chart and I can see my entry here is under this range that we talked about, we're inside the range. We don't really want to trade in a range. I don't. It was a breakout trade. You want to break out of the range. So with this trade, if I look to my 5-minute chart for confirmation, this is the exact same time. So I've scrolled it ahead just a tad so you can see what's going on. But we're actually in an exit candle on the 5-minute chart. To me, that doesn't seem very good. So if our entry candle is an exit candle on another chart, that a lot of times you're like, oh man, I'm opposite of what everything else kind of is in another time frame. And a 5-minute chart, that's pretty close time frame. So to me, if I'm seeing that, that's a red flag. So if you were into this trade and you did see that, and let's say you were sitting there trading it and you saw that, you can pull the stop and go, you know what, this isn't quite where I want to go. So maybe I'll just pull it up and protect this one, but we'll just let it play out as if we just left it alone. Just keep playing. Hang on a second. Okay, so let's just redo this one. I hit cancel on accident, so get back into this. Oh crap. If you that shows exactly what happens if you have replayed and then you're trying to rewind again. Say you missed it and you're like, dang it, I want to go back and do it again. If you do go back and do it again, you have to reapply the study. So you have to go back and click Dominator on again because the study thinks that it's already sent a signal on that prior bar. So if you just rewind real quick and hit play, the study will think it's already sent a signal for that bar. It won't do it again. So that's just what's going on there. So if you reapply the study, hit play again, it'll work again. All right, here we go. So same trade. It's coming back. Oh man, we were in an exit candle. Not good. Lost a couple points. So we don't want to do that.
Alert.
So now we're in another trade. Same thing. Okay, well, we're still not trading off the 5 minute yet. We haven't hit the point where they're lined up and we're breaking through this range. So if you traded 2 of those, you're like, man, what am I doing? I don't want to trade much more. And in fact,
alert.
Let me just pause it. And in fact, I'm getting pretty close to my daily cutoff here. I've got my cutoff set. If you look at your studies, pretty sure it's set at about $200. My giveback's at 210, so I got one more trade before I'm going to call it quits, and that's just the number I've picked for the S&P, and that's what we're going to use for our demonstration. So this is the last shot. Now in this trade, let me just show this. My 5 minute chart got all off, so let me move it back here. So now we're finally at this range we had talked about earlier. We're breaking out of the range. Your entry is just at the range, if not, it's one tick out from a little slippage here. So if I'm looking at that as an entry, and I pull my 5 minute over, and this is what I'm seeing here. So we're at the exact same spot on the 5 minute chart. This is our entry candle. It's the same entry candle that we're getting on the tick chart. So that's another confirmation. Hey, this is really nice. Now we've got a confirmation on both charts that we're in a good trade. So if you see that, that's a good trade, man. That's a good trade to use. So let's pull our 5 minute over here. We're still here in this trade. We finally we tried to go long a couple times in this channel and it just wasn't working. So now we finally broken through and we're going to trade this out for the rest of the morning and just let it run. So these were 2 levels that we picked earlier that were possible areas of pretty strong resistance. Now we've gone to +1. We're protected in the trade. Plus now the algorithm will exit if it pops below this blue line. So now we're kind of just sitting here. Now, if you prefer to scale in, you can be adding contracts every leg that it starts running up, and subsequently pulling and adding a stop as you go up the line. So that's another thing you can do. So as we go up here, just let it play out again. I'm going to move this stop up a little bit. I like the higher level, so I'm going to bring it 1 tick inside the higher level. So we had 2 good days of trending. And, this is just, 2 good days of trending, and this doesn't happen every day. We don't say it does, but we're just trying to capitalize on everything. Can the strategy use agreement in 2 charts as a filter? Not currently. It can't. No, there's some pretty hard things to do programming wise to get that to function correctly. But for now, the visual confirmation, or if you're trade off a 5-minute chart, using something else to let you know is how we do it.
Yeah, we are working on linking the charts in that fashion to have that as a condition as well, but it's turning out to be more complicated than we thought it was. So, but yeah, Pat also asked a little earlier. It looks like it says in Ninja, I've seen automation based on users drawing lines and trend lines, etc., to trigger entry and exits. Have we developed anything similar for AT and Sierra?
No. That would be a very hard to quantify. Does that make sense? Because the line is going to change constantly. So for me, that would be very difficult. I mean, I could see how you could probably put it together. We haven't done anything like that though. Our main focus currently is on this something we will show in a little bit, a swing program we've been working on, because a lot of people do like to trade multiples. For demonstrations, I like to show the singular model. Some people do like to go all in with multiple contracts and just take them all out at once. They don't like to scale out, but a lot of people like to scale out. So we have focused on a program for scaling out. We'll show that here in a little bit. But it's something that we've been working on. It's not quite ready yet, but it's something that we thought we would kind of let you see. But that's kind of our focus lately, as of late, is just something like this, more of this kind of style of deal. So I'm just going to keep playing this now. We've had our long, so we never even got to these two high levels that we were thinking of in here, but we didn't take the first short. If you notice this, because of our settings in the algorithm, it won't allow you to take this. Now you could speed it up so that you could capture that if you want to take the first snapback right in here and try and take that. But with the settings that I prefer, I like it when it enters on the second one, at least on the second one. So once it's hit that second one, we're in on a short now. Now we've been going long for so many days. We're kind of counter trend trading here. So I would be very cautious with these kind of trades, personally, and I will protect this trade a lot, especially if we've been winning. But I'm not going to protect it at all. I'm not going to change anything because I want to show the give back feature if it does lose. I'm not sure what's going to happen, but if the give back feature kicks in, you'll notice that we won't see any more candles for the rest of the day. And I just kind of want to point that out real quick before I continue on. We'll let it play here, and we'll see if it comes back. I would be very cautious on this trade if I were live at this point. And I would be expecting a certain correction somewhere in here. So now you go to at least +1. You got another 4 points. I mean, you could totally pull it down and get some profits. It may come all the way back up and hit +1 here. But I'll just let it get out. Should exit pretty soon once it goes again. Now it's coming right back to the original range, so you should expect a pretty hard bounce off of that range. Then we're getting it. There it is. So now we should probably expect a little bit of pullback unless it can go down. So here we go. There it is. So now we're out. And we'll just let it keep going. So the give back never got hit. So we fortunately we did good in that trade, and we kind of let it play out. So now we're getting close to the end here. We're not going to be able to trade anymore because the program is kicked off on the time frame. So we'll just pause it and let's just jump. Next day. Where are we at? So where are we at? 3. So not too bad for a couple of good days. One losing day though. So Monday I don't have it on my chart, but let's assume you lost 2 points on Monday. We lost a couple points before we got started today. And but at the end of the day, you were at 6 3/4 points after these losers. So we're doing pretty good this week. We're at 10 1/4. What was that? 6 3/4 at the end of the day. So now we're here. Let's get back. I'm going to rewind this one since we did get an entry here, and we'll talk about that one. But let's just look at the overall picture here. Got a new range after the other move, and this is the prior range that we had the day before. So now our range is kind of expanded out after a couple of days moving up. The overall range is right here. So let's just go from where it started taking off. So now we've had a couple of legs on the bigger picture of things after a few days of nothing. So a third leg could be expected. It could be something that could happen. We don't want to discount it. So we're just kind of looking at this. Still same thing. Let's move our trend line. It's kind of off. All right. So now after a couple of big days of movement, let's go to our 15-minute chart. All right. Same picture, but to me it's a little clearer now. We can completely see that first leg consolidation, second leg consolidation. So now a third leg or a correction is expected. I mean, it can only go one of two ways, so we got to be ready for both. So on the 15-minute, we're still in an uptrend, and let's say, and it'd be cool to catch a reversal in here. That's what I'm waiting for, a small, maybe a correction trade. Maybe I like to correct off of these, 15-minute charts or something. But after a day like that, you may not have much of anything. So we've gotten a day that was pretty long, a couple of days in a row. So it could just consolidate all day. So we need to be ready for that. So according to my 15-minute, bigger time frame, yeah, it looks like it could go long still. Let's look at the 30. Same picture here, kind of back and forth though early in the morning. Maybe some overnight stuff went down over in Europe. So now we're still in the long here, but could possibly correct or just get stuck in a big range. Now our risk is getting bigger on these bigger time frames, if you notice. So go back to our tick chart. All right, so here we go. Back to that first trade of the next day. Back into this range. Now we have another range. So yesterday we did this trading through the range instead of waiting for it to break out of the range, and that hurt us while we were in this range. So you could choose to turn it on or off, and that's why we have this on and off function, because a lot of people will be monitoring these trades, and they do not want to allow for the full auto function. Now you can have it turn on at the open, and that would have gotten into this trade. If you see, it's a 737, so it's kind of a move off the opening candle. Opening candle is right about here. Boom, it's long, comes down, another long, and now we consolidated. Not sure if it's going to keep going long, but off the open, trending off the open is a good move. We always like to trade those, so maybe we're going to trade it. So let's just put in our parameters and let it go. They're already in, so I'm going to play it.
Alert.
There we go. So again, you're in that range. Now you've got a point where you can pull this stop up and protect your trade. And wham, we get hit. We pull it up, lose a quarter. But we were in the range, and we knew that what was going on with this. So we didn't want to get crazy in here. So that's one of the reasons why you would pull your stop. Now the stop is intended to protect too big of a loss while this is going on. But this is why we created the functionality that you can come in and co-manage your trade a little bit. But for the most part, you're still letting the program manage your trade. Now there's another one, in the range trade. Not something we really prefer. So maybe if you waited or you took these two, now you're waiting for one to get out of the range. And if you're looking at your 5-minute, let me just pull this up, make sure it's right on. 854. All right, so if we're looking at these trades, and I pull my 5 minute over for confirmation, all of these trades that we took, nothing was trading in the morning for us. Like, this is way early, so none of this mattered. Now all of our trades that we're trading are in the middle of the 5 minute channel. If this 5 minute channel is real wide and it's just bouncing in here, waiting for this to tighten up and match what's going on the tick chart typically can lead to a better trade. And so if you're trading inside of the channel on one of your charts, unless you're intending to, unless you're trying to trade like a 30-minute reversal candle and you want to pick up that entry on a different chart, then you would want to avoid trading with your confirmation chart inside of its channel. So you could avoid all these trades by turning it off. Now that's something that the program just can't do together at this time, but that's why we designed it the way we did, so that you can sit here and let it play. So we're just gonna let it play through. We got 112 on our give back. We're down a couple points.
Alert.
So let me see here. So let me get my 5 minute. Hang on. Oh man. My 5 minute keeps jumping around. Let me hang on. Time is that? We're at here. We're at 9:13 now.
We can stop here, pause for a second, see if there's any questions.
So here we are on our 5 minute. Y'all go ahead and type in if you got any questions on this. On our 5 minute, we're still in the same range, but we have finally had the Danchi channel levels have evened out. We got 56.50 and 52.25. What are we over here? We're 58.75 and 54.50. They're still kind of off, but they're pretty close to each other. They've gotten a lot closer. But with that retracement back inside of this range immediately, if I were managing this, I would be considering pulling that stop up just a tad, protecting it, especially after this leg and it's tried a second time. Usually can't do much more than 2, but I'm just going to let it play. Now this one, the pink candle may exit you prior to this. There it is. Pink candle protected you a little bit better than the stop did. So it lost a quarter tick because the algorithm and the range tightened up so much that the algorithm kicked in. So we're at 1040. How many trades have we made? 1, 2, 3. 3 trades, down a couple points. Give backs 125. We're not too bad. So let it play for a little bit longer here. Skip a little bit. Where we at 11? Just one of those days. Maybe you already left. Still in consolidation.
Alert.
First short in the afternoon, right about 12:50. Could be a good closing run, and it could come down and hit this trend line that we drew earlier. That'd be a good move in the downward area and coming back into the range that we had 2 days ago. So this could be a good move. Let's see where our entry is on our 5 minute chart. Okay, here's our 5 minute. For confirmation, what are we doing? Same thing, got into the range. But here's our breakout candle those Donchian channels are almost the same. Let's see what they are: 54 and 54, 50, and 58. They're exactly the same now. So we've got a confirmation on a time and a tick that look exactly the same. 2 entry candles, even though you can't see it on this Dominator off. I don't know if I have the settings the same for this one. But so here we go. It's we've got a confirmation on both these charts. So this could be a great little trade. Let's just let it play out. Even if it does hit us, it may kick off the give back amount here. So let's see. All right, so we're +1, so no big deal. Last trade of the day, let it run through. And you can pull your profit target to one of the correction levels you pick out. You could pull this right here, set it right there. This stinking trend line keeps moving. I think it's somewhere in there. Let's just move it. Right. So algorithm exited out again. Right at the end, we were down a couple points. We're up a couple points. Give back was still at 125. So we got down a little bit, waited for the last trade of the day, closed on a good note, made a good little trade at the end. So, we had some losing trades and we had some trades that came back. But the point was we kept trading and letting some of this chatter get bypassed. The algorithm bypassed it, or your settings will bypass it if you have it set correctly. So I like a bigger tick chart because it does match up with the 5-minute. And when they do, it typically leads to a really nice little trade. So let's skip here. Where's that, everyone?
Like 15 hours.
Yeah. Thank you, Greg. I think I would know math. I'm kidding. All right. All right. So look at it playing here. All right. Same range that we've been in all week, really. We've been trading kind of up and down this thing. What are we looking for? We look for something coming out of that range or correcting back in. We had a little correction the day before. Let's see here what's going on. We got positive momentum. Tight little range.
Alert.
Should be getting a trade long. There we go. We're at the range again. Same thing though. Same thing we've been dealing with the last 2 days. We're trading inside of this range. 3 days in a row. Has it worked? Oh no. Not really. So, these breakouts of these ranges tend to give you a little bit more room. Now you can even pull your stop and protect this trade so you're not giving up the world. Now you had 2 chances, so now you definitely would want to pull it up if you were managing this. Now, if you weren't here to manage it, the algorithm will exit prior to this stop loss now because of the channel tightening up. So that's one of the safety features that it'll take over on the other end. This may exit right in here. You actually won. So the algorithm exited above your entry on that one. And it was because the market tightened up so much that the algorithm's going to exit as soon as it goes short. So trade number 3. Let's look at our 5-minute. We're at 9:02. So with this one, our Donchians are almost exactly the same. They're really close. Where are they at? Pretty close. So they're pretty close to each other. Maybe you're thinking that on your 5-minute, this looks like it could break through here. To me, it looks like it may need to break out of this range before it can finally go anywhere. But let's just let this play through. We've given back 100 right now. We're down 1.25. Here we go. But we're trading in this range again, right? That hasn't been very profitable all week. In fact, it hasn't been at all. Now let's look at something. we're at a give back point of down to 200. Our give back's at 210. So with that structure, I've given myself one more trade on the give back, and we're down 3.25 points. You know, if this is out of your range or you're done, then you're done. But according to my, what I've planned out from the week, my give back is allowing for one more trade. So maybe you're waiting for confirmation on more than one chart to do that. So, hang on a second. This chart did it again.
Pat asked if the algorithm includes break-even or trailing options. The algorithm itself, if you're talking about the algorithmic exit, it follows price. It follows, right behind that 10 EMA as Zach has been showing on there. So in a sense, it does trail as price progresses. However, it is not any kind of hard trailing feature where it trails by a certain amount and you always know where it's going to be. In general, you can see where that algorithmic exit is going to kick in when price comes back across that, or a new candle opens up on the other side of that 10 EMA. So in trades that tend to move and develop well, then yes, you get a trailing effect from that algorithmic exit. But in trades that don't develop quickly or don't get a good breakout, that algorithmic exit may not trail as much or protect you as much as you would like, which is really the reason we put in the stop loss, and then it's the other reason we put in the break even.
Yeah, and we wanted the trigger adaptable by the user. So the trigger's in there, it's in the algorithm, but we allowed the user to come in and adjust your trigger, Pat. So if your trigger, you maybe you don't like to go to +1, you think that's too tight, or you want to adjust, I want to adjust this and trigger it and then take profits almost at the same time maybe. And I'll show you how I would do that here in a minute.
Yeah, but what you're controlling there, Pat, what he's showing everybody there is that is the stop functions that we've added into the program. That's not actually the algorithm itself that controls that algorithmic exit. So the algorithmic exit's always in there. It's always running behind the scenes.
It's basically your safety net.
Yeah.
In case there's a flash crash or something. I don't know if anybody's traded through one of those, but it's can be exciting and scary at the same time. And if you don't have something protecting, you could be wiped out. So yeah, and this is a great example of the algorithm being able to save you on its own. And then one where there's no pink candle here, it couldn't have come back fast enough. I mean, it would have given you one way down here, but where the stop is needed to protect one of these faster moves back. So we're sitting here, last trade, got one more in us. Negative momentum, trying to go long, not going to work. So let's wait till we break out of this range. Could be good. Maybe just a sideways day again. We've had quite a bit of movement this week. So let this play out. Man, that tightened up. Look at that. Risk is down to 3 ticks across the channel. That's a pretty tight channel. 55, 57, 3 points. So that's a tiny range for S&P to be traveling in sometimes. Same thing here. Inside the range, no confirmation on your 5-minute. It's coming right back. Obviously, it's not going to be a really great trade, but it'll show the functionality of it cutting off. Oh, and it showed the algorithm taking you out prior to hitting your stop loss. So if you're in these tight ranges, it can help you out. So also we're done. So the program's shut off. We're not trading the rest of the day now. And let me fast forward a little bit, and you'll see that it's done. You know what? Hey, it went long. But trading in the range can get you no matter how many safeguards you have. So, you know what? Sometimes it's just how it goes. And maybe you were done after that and said, I give up. I'm done. So, our prior 2 days, we're doing pretty good. We're up 17. We lost 4.75. So, let's take that out. So, we're still up 12 and a quarter points for the week. And we're going to go to the next day. We played it out the way we should have. And it just didn't work out. Sometimes that happens. Let's go here. Get to the next day. All right.
What day are we on?
I don't know what's going on. We should be on. Was that Friday or Thursday?
You may be on Friday already. Yeah, 17. So you're at the end of the
already
week.
Friday. Man, that went fast. Let me stop this. So 12 and quarter points for the week. We let it play it out. Had a rough day on Friday, and if that was Friday, we all know how Fridays work. I'm just going to clear this out. Talk about using a different time frame. Friday's a great example, because of the alignment we were talking about before. Bouncing in a range, we don't really like trading in ranges. We've seen through the week how no matter what you do, the trading in range can kind of beat you up. So you want to take these breakouts after the range. Now, you may have traded that one. That could have been a +1. But down inside of here, you're still inside the range. Kind of want to wait for that to move out. So this third one, what was the difference between the third one and all these? And that one is the 5-minute chart. Let me pull this in just a tad. Right. So if we look at the entire day, we're watching the S&P, and maybe we wake up Friday. We've had a good week. We're up 17 points. We're coming in here and we're like, man, okay, it's Friday. It's been a crazy week. I'm going to slow down. I'm going to be really conservative. I'm not taking anything in here unless I see a candle in the 5-minute matchup. I'm not doing anything until I see some kind of confirmation, right, across a bigger chart. So let's look at the 15-minute chart. If I'm pulling my 15-minute, say we don't even see that candle, the long that we're looking at, all day long it's been in this huge range. So, you wake up and you look at that. All right, well now let's look at the 5-minute. Big range, not one entry candle on the whole thing. All right, no trading. So you just sit through all this until you see one line up. Now what happens when that green candle comes? We get an entry on the 5-minute chart right here, 1657.25, 1655.50. There's an entry here. Let's see what time it is. 12:10. I got an entry candle on my 5-minute. So on my right chart, I see green. All right, so on my left chart, same time, 12 o'clock, we got an entry candle at the same time. So we have an entry candle formed on the 15-minute chart, the 5-minute chart. All right, let's go to their tick chart. There's our candle. Same time. So 12:07, it hits right prior to the 5-minute chart, but you're looking at the 5-minute chart, and you're looking at the tick chart, and you're looking at the 15-minute chart. You've got an entry candle on your 15, entry candle on your 5-minute, entry candle on your tick chart. So there's 3 confirmations coming across. Now you can arm this program on this one and capture this last move based upon a confirmation from a bigger chart. So maybe if you like trading from the bigger chart, like I'm looking for the entry. I'm looking for this on the 5 minute to push down and break through this and get out and start moving. If I'm looking for this entry candle here, the way to capitalize on it is look at your smaller time frame for the entry, either the 5 minute or the or some kind of tick chart for an entry. So you can enter off the 5 minute too. So you just even sometimes say this one comes first, right? And you miss this entry, but you still got an entry on your 5 minute candle. By all means, you can come over and turn your dominator off on your other chart, right? Turn this one off, and then arm your 5 minute, and then capture that move. As long as all the confirmations are up, then you can do that. So that's one of the ways to use it between your charts. So if you're looking for something to pull up off, if you're looking for the entry on one chart, you can use your other one to capitalize on that movement. Now you've already got your settings set because you kind of know how the S&P travels, or you don't like anything other than a 4 or 5 tick stop loss, then you can have that set already prior, let it go and take that trade. Because maybe you want to travel it pretty slow, or you could give it more room and then have your trigger pop it up to what you want to limit yourself to, 3 or 4 ticks or something. So there's other ways to use the trigger and the offset to help kind of capitalize on your strategies. But that's just one of the ways we like to use these different charts and different confirmations. That's why I like to stress that you can adapt this program to different time frames, tick charts, range bars, and stuff. And looking for the confirmation on the other ones just kind of helps out if you can see these, and getting them to align also helps.
Yeah, again, each setting that he uses is relevant to that chart, that market, and that time frame. As Zach said, you may have to adjust your settings a little bit. We've had some questions from people that want us to give them some ideal settings for any individual market. And what we're going to put together, we've got kind of a chart that gives a range in the setup guide that everybody got when they signed up for the trial. So there's a chart that discusses some ranges in there, but we're going to put together another chart that for these 4 markets that are in the Dominator chart book to give you guys kind of an aggressive, moderate, and a conservative range for those settings that you can play with. John asked if we could briefly review back testing at the if we have time at the end, and the answer to that is yes, of course. I'll try to keep it brief, John. I don't know if I'll be able to, but back testing is a big subject, and we had a webinar about it, I think a couple of weeks ago, and we've gotten a lot of questions about that.
Yeah.
We certainly want to encourage everybody to back test this system and see how it operates in different conditions and at different times. So I'm happy to go through that process with everybody. And I'm going to be sending everybody out an email. I started working on it last night. It kind of has some just some important tips for back testing. There's no video or anything like that we put together, but it's just kind of 6 steps, 6 things to watch out for when you run back tests, on your own. So I'd be happy to go through that process. As soon as Zach kind of wraps up the review process. Any other questions about the type of analysis he's doing, or using different charts for confirmations, or even as far as the settings on the program? Do we need to go over those again and kind of talk through those and explain how they affect the program, the trade entries?
Yeah, I mean, we can, if anybody would like that.
Sure. I mean, we want everybody to understand how the program works. It is like I said, it's got a good flexibility as a program. You can use it in off mode and just use it as an indicator, and you can trade manually over the top of that and do whatever you want, or you can co-manage it, turning it on and off when you feel like it, or it has a full automated feature as well. So
yeah, maybe you like an hour of the day. Maybe you only want to trade the first 30 minutes of the open. That's it.
Yeah.
You can run it. Then you don't even need to be there at that point. If you're running it on such a small time frame like that, I mean, that's that's no problem. So yeah,
maybe
that's one of the.
maybe you want to trade gold at 2 a.m. for an hour, every morning or something. So you can. The
Yeah.
system is perfectly capable of doing something like that. Whether you're involved in co-managing it or, still in the bag of sleep.
Or maybe
Because
or
it's
maybe
the
you get a
middle of the
phone
night.
call and you just get into a great trade. How many times does that happen? Somebody knocks on the door, somebody's coming by to sell you something, and you're like, "What is going on?" You can once it's doing its thing, maybe it gets to +1. You can just let it do it. You know that it's going to have to reset itself, and all the parameters are going to have to equal good before it can get back into another trade. So that gives you enough time that if you do manage the trades, can't let it kind of do its own thing. So I'll just go through changing some of these. If you look at our off study, we're looking at all these candle entries. Now we're just going to make it extreme here for demonstration. I'm just going to make it real extreme. We're gonna crank these down. Now, there's something said about cranking it down. If I turn it down to 3, that means my period is 3 periods, right? For momentum and strength. So it's only measuring 3 periods past. So it's going to give you entries everywhere. Every single one that it, like one after the other. Look at that right there. So you can turn this thing up and be super aggressive if you want to see all the entries. If maybe you want to see them on this time frame, but you want to trade off a bigger one. Maybe you just want to see it going ahead and here. Well, you can adjust it like that and see every single entry that you can possibly get after a breakout of the channel, pretty much. I mean, almost every single one. Now, if I go down here and go too far, let's go to 0. I'm going to take this down to nothing and apply it. I'm not going to have many of anything. It's not registering correctly. If it's registering something, but it's not registering it correctly. So if you have 0, it's not going to know what to do. It's going to switch it back to 1 actually, because the parameters will not let it go that far. So it's automatically going to say, dude, you're not doing it right. We need something. So 2, 3 is about as low as you can go before it's going to start doing anything correctly.
The lower you put those momentum and strength periods, the more aggressive it is, and you're effectively taking those filters out of the program, is what you're doing by, lowering that period field so low. You're like I said, ultimately you're just kind of removing them from the program itself. They're still there, but they're so set to be so aggressive that they offer no filter features, at that point. And Kristen has a good question. If everybody can see that, if there's a green trigger on all time frames at the same time, how do you turn on the auto feature? You see, the game is over unless you manually enter the order, but then you lose the other protection features if you're trading manually. Yes, Zach could tile his screen here and have 4 charts and have 4 charts on the S&P and be looking at a 30-minute, a 15-minute, a 5-minute, and a 2,500 tick all at the same time. And so, Christian, what you could do is just keep the study off. The dominator off study applied to all 4 of those charts. And when you see something developing that you like, then you arm the chart. You arm whatever chart you want to trade on. So if it's the 2,500 tick, you would activate that chart and just turn the study on that chart. That would be the easiest way to arm the system, so you catch the trade and still have all the protections of the program behind you. Because you're correct. If you just manually enter an order in off mode, you don't get the stops put in there. You don't get the break even or the target. Nothing. Mm-hmm. You're just trading manually at that point. So.
Yeah, this is a great point. A lot of people do look at their charts this way. So that's a good point, Brig. Is if you watch your charts like this, you are watching for all those confirmations on one screen. So if you are watching these, you see that it's off. I like the pink in there. I know pink's dominator off. I can see the pink is off. So I also have something, and Pat, I will get this to you. There's a program that they use over at Sierra Chart, and it requires a little bit of programming. but then you can use your hotkeys to arm these. So the way I arm it is I will click on my chart if I want to arm the 5 minute, and then I select my hotkey. It arms my program on that chart, and I can easily disarm it at the same time with the touch of a button. So for me, that's how I kind of do it. And that's another thing. If I'm watching multiple markets, let's say you're watching, I don't know, soybeans over here somewhere, and you see soybeans moving, you're like, whoa, I want to get it. You can come over, click soybeans, bam, arm it, and then you can move it to the side, let it do its thing. So that's one of the things. I will get that little program. It's Auto Hotkey. It's free. You can find it on Google, but it's what the Sierra developers recommend to use, and it's what they use for some more shortcuts that you can set up. And I will send out. I will host. We'll build a little sample script on how you would arm these with that function. But I can make that. I've got one. So it takes a little writing. You have to kind of
It gives you a quicker way to change between those studies, but otherwise you would go to the analysis menu and click on the study to change it. At this point, we don't have a way to link all 4 of these charts, and so you could keep one chart armed all the time, and you'd only get an entry if all 4 charts synced up. Like I said, we're working on some programming to try to do that at this point, but right now we wouldn't be able to. So if you're watching the same, different charts for the same market, that's how we would do it.
Exactly. You're watching these and just arm them. But the little hotkey's great, and it will keep it. Now, if I prefer trading off the tick chart, for me, I have it armed. If I'm seeing everything pretty much lined up the way I like, I just have it armed, because at that point I've already, hey, I see what I want. I'm gonna let it go, and I'm gonna wait for it to just capture the move. So I like to leave one of them armed. I a lot of times I leave oil armed unless there's something really not looking good, because oil does explode sometimes, and you're like, why did that go? So I want to capture those, and if it does look the way I want to see across, my other confirmations, I'll leave it on and leave it armed.
Yeah, remember, even though the program's armed, it's only going to trade based on the inputs that you provided. So the time frame, the risk factor, everything else.
Yeah.
And so you can set the off studies that you've got on all these other 3 charts to the same study settings as your on study. So all your charts are synced in that fashion. You're seeing the same study settings applied to every chart, whether the study is on or off. We would recommend doing that. But like you said, typically we leave one on. I mean, if we're going to be trading live, we turn it on because, that's a benefit of the program. When price can shoot out of there in a flash, and if you're, refilling your coffee or something, you'll miss it. So we like to keep the program armed so we don't, so we take advantage of that benefit of automation so we don't miss opportunities.
Right.
It's only going to take opportunities that are in line with our plan. So, you have some comfort leaving the system armed like that. Any other? That's a good question, Christian. Any other?
One more thing I want to show real quick. If there's not too many more questions, we'll show this real fast. Just want to show you guys what we've been working on, something that a lot of people like to use. Where was it? That's the wrong tick. I guess that's a good point too. When we talk about all these different markets, a lot of times, maybe your chart doesn't look like this. If you pull it up and you're going, man, I don't know if that's going to work. Let's say we're on a 500 tick on the S&P. We're going to get hundreds of entries. Or if we're on the 2 minute or 1 minute, we're going to see all of these entries, right? We see tons of them. Now, Pat pointed this out, and I think I should point this out too. If you're running your trial, and let's just say you're trading, you're messing around with your trial, and you have your trial on, and you're watching, and your trial's on over on a tick chart, and as the day's going along, you start hearing all these dings. Ding, ding. You're going, what is going on? And if you're not in sim mode, and your trial is on, it'll just ding. You'll hear a ding and it'll show you a candle, but you won't see any kind of order. If you hit simulation mode, you'll see that order sitting there. So if you're trading live and you have your trial on, it may sound ridiculous if you have it on a tiny chart and it's just dinging over and over. So that's the reason why we put this setting in here. If you go to Studies, under your on version, you click Settings, you can change these short alerts to say, no, I don't want it to alert me at all. I'm just going to, like, and this is on the trial version. For me, I like to have an alert, especially when I'm dealing with something that's trading live. So I want to know alert, and I'll look around, and if I hear my alert, I'm like, what's going on? Because primarily I'm in live mode almost all the time. So on this thing, if you're looking, and maybe you like to trade off the 500 tick chart, you need to tighten these parameters up to eliminate some of this chatter on the smaller tick frame. Also, look how many candles there are. This is just too many. So maybe you go to a bigger frame. So you go to 1,000 tick and see if it smoothens out, if it looks a little bit smoother. That's something to do. But I recommend you obviously understand whichever tick you're looking at. There's 100 tick. That doesn't look good. But you obviously understand the tick chart before you start trading it live. I mean, you kind of need to know the behavior of it. But the point is that you can kind of smoothen out these charts and find a better little looking chart.
In general, you want to look for smooth price movement. You know, and the system is going to run better on a smoother time frame. If you get too short of a time frame, things get too choppy. Like we said, you get too many entries, and you lose the effectiveness and efficiencies of the program if you shorten things down too much like that.
Right. So here we go. I'm just going to showcase something we've been working on. A lot of people have been looking for this. A lot of guys like to trade multiple contracts. So I know one of our live traders is already looking to do this. He's already wanting to go with more than one contract. So what we want to do is have it set up for him. The point of this, though, is that you have to have more than one contract. You have to trade with more than one for this function to work. So this is something we're going to be making soon. I know people like to scale out. So I'm just going to play this, and I'll pause it as we go. So I'll pause it real quick once it gets into this first trade, and then we'll talk about it, and then we'll finish up.
Alert.
Okay, so I'm on the trial. I went back too close. Hang on. Messed it up.
Alert.
You hear that? All right, so here's my multiple.
Alert.
I'm going to show you this, guys. This is another one we wrote. This is going to be the scale out or a swing type of program. We will have 2 profit target shootout. Let me pause this. Once it gets going, I'll show you. We're going to be trading with 5 contracts here.
Alert.
So if you see the total quantity here on your stop is 5. So we're in 5 contracts at 1657.50. I've got all the same stuff built in. However, I've got something else built into my trigger. I'm going to go ahead and take profits right about the trigger point. So if price hits my trigger, that's when I want to take some profits, and then I want to take the remaining stops to +2 or +1 to cover the rest of these that I'm in the market. So I can't lose. I've already taken my profits, and we're sitting here, and we're going to let it swing the rest of the run. So that's what I've done here, and this is something that you have a multiple profit target inputs, so you can just put in target 1, target 2, and then primary initial stop loss, and that will sit right here. I'll just play this out. So we'll see it hit that, take out 2 contracts. We're going to float the rest of these in this trade. So we're about to hit the trigger point. Trigger, and now we should hit our profit. Well, maybe not. 1 tick away. There it is. So we've taken some profits. We took 5 points out on these 2 contracts. Now we're going to roll the rest and just let it float. Plus, now your algorithm will protect you. It won't hit the stop. Now, so you have kind of a, like Briggs said earlier, a trailing stop following on the remainder of the contracts you have in the market. So you have 3 more in, and we're just kind of following it. You can either pull your profit in or get in again if you want to go back in to the market, but you have those choices. So this is more of the swing program, and I know a lot of people are looking for something like this. They want to be able to take those profits when they get out of that range and let the rest ride. So just want to kind of show this. It's not ready completely yet, but it will be ready soon, and it will be included in the normal price of the entire program. So now you see this here. Let's pause. See our first exit there, second exit up here at the algorithm. Instead of taking what was that, like about a 10-point run, we've almost doubled it by being able to scale out some of these. So that is something that we have coming, and we want everybody to get to check that out too. It will be a part of everything. It may not be part of the trial, but this is going to be part of the live program within the next month or so.
Yeah, we're constantly, we want to, like I said, we're a technology company. We want to continue our developments on the software side, and this is something we've been working on for several months, but we've had a lot of interest, as Zach said, that's peaked here. Questions about, people scaling out and our swing trading, our swing program. So we want to make it available to those who want to use it. We understand a lot of people that trade S&P trade in multiple contracts. The regular software can trade in multiple contracts as well, but you just get one, exit point for all the contracts. So, we want to continue to develop products and updates that help people do what they want to do in their trading. So this is one of them that's coming, but we will include it. It's not a separate software or a separate product or anything like that. It operates the same. It just has multiple, targets, allows for multiple targets.